Floki Inu is a cryptocurrency that has gained significant popularity as a meme-based coin. It was initially named after Elon Musk's beloved Shiba Inu pup. It has evolved to become a fully fledged Web3 project spanning decentralized finance, NFTs and the metaverse. The associated token, Floki, is a multi-chain token that operates on both the Ethereum and Binance Smart Chain blockchains. The project has an encoded 3% tax imposed on buying and selling the token. This tax goes to the Floki Inu treasury to develop the ecosystem and increase adoption. The main philosophy of the coin is reflected in its three pillars: meme status, utility, and charitability. Floki is attempting to create utility for the Floki token within its own ecosystem. It is also educating its growing audience on crypto through its metaverse university. Floki Inu is compared to Shiba Inu tokens, and if you're keen to buy it, you can do so, but be aware that it is highly volatile. Floki Inu has emerged from its roots as a meme coin to become a fully fledged Web3 project spanning decentralized finance, NFTs and the metaverse. The token associated with the project, Floki, is ERC20 and BIP20 compliant, allowing it to be bridged between the Ethereum and Binance Smart Chain blockchains. To fund the project, there is an encoded 3% tax imposed on buying and selling the token, but not on the transfer between the two chains, which is directed to the Floki Inu treasury. The project has a three-pillar philosophy of meme status, utility, and charitability, and the team behind Floki is working to develop its ecosystem further to increase adoption. This includes partnering with the Million Gardens movement, creating its own blockchain ecosystem, introducing a suite of DeFi products, and launching an NFT game and marketplace. Floki Inu also has plans to establish a school in underdeveloped countries and create a metaverse university. Overall, Floki Inu has come a long way since its inception and is making strides towards becoming a more viable cryptocurrency. While there is still much work to be done, the team seem to be taking the right steps to make the project successful. It is important to note that cryptocurrency is a highly volatile asset class, and investing in Floki should be done with caution. Bitcoin attempted to break through the $25,000 barrier but failed, resulting in liquidations of long and short traders. Market volatility was caused by whale traders attempting to move the market with large orders. The potential resistance to be overcome is still uncertain. According to venture founder, a contributor to on-chain analytics platform CryptoQuant, a retest of lower levels is likely to occur before upward continuation is likely to occur. The article accurately highlights the risks associated with attempted breakouts of Bitcoin's current resistance level of $25,000. The warnings from experienced traders and analysts of possible downward movements are insightful and demonstrate the importance of remaining vigilant and aware of the potential pitfalls of the market. Furthermore, the inclusion of the venture founder's theory of the potential for a retest of lower levels before upward continuation for Bitcoin is an interesting perspective. Overall, this article provides a well-rounded overview of the current market conditions, as well as valid warnings and predictions. Hive blockchain reported a net loss of $90 million in the third quarter of 2021. This was due to Ethereum switching to proof-of-stake validation and the depressed price of Bitcoin. As part of their post-merge strategy, the company is redirecting its graphics processing units. It is supporting high-performance computing workloads other than mining. Hive also launched Hive Performance Cloud, which is 25 times more profitable than mining in dollars per megawatt hour. CEO Aidan Killick believes this is an evolution of their skill set, and the company expects $1 million of annual revenue from this business line. This article provides an insightful overview of the financial performance of Hive blockchain in the fiscal third quarter of 2021. Hive reported a net loss of $90 million, or $1.09 a share, for the quarter ended December 31st, compared with profit of $51.2 million, or 66 cents a share, the year before. This is primarily due to the Ethereum blockchain switch to proof-of-stake validation, which cut the firm's revenue and gross mining margin by about 50%, as well as depressed prices of Bitcoin. The company is now using some of its graphics processing units to mine other crypto tokens, and is redirecting its GPUs to support high-performance computing workloads other than mining. Hive estimates that the cloud segment is 25 times more profitable than mining when measuring in dollars per megawatt hour, or electricity consumption, and expects $1 million of annual revenue on a run rate basis for this business line. Bitcoin has seen a strong upswing since the start of the year, however it has been unable to break the $25,000 mark as it did in August 2020. According to ConsenSys, a crypto trading advisor at SEC Capital, the breakout depends on the performance of technology companies. Bitcoin tends to move in sync with the Nasdaq index. Tether has been dominating the crypto market, with traders parking money in the stablecoin. Regulatory risks have also caused uncertainty in the market, and evidence of investors pulling money out of crypto funds has been seen. The Fed funds futures show a 15% chance of the central bank lifting rates by 50 basis points next month. However, some market participants expect a potential breakout above the technical resistance at $25,000 to bring a sharp rally. Bitcoin currently trades at $24,650. This article discusses how the recent upswing in Bitcoin's price has stalled at a level that proved to be a tough nut to crack last year. Market analyst ConsenSys believes a breakout above the $25,000 level could depend on the performance of technology companies, as BTC tends to move in sync with the Nasdaq index. There is evidence that traders are currently parking money in USDT, and the BTC rally could resume once this trend ends. Regulatory risks have also impacted sentiment in the crypto market, evidenced by the retreat of call put skews to zero and outflows from crypto funds. Lastly, concerns about sticky inflation have resurfaced, stalling the rally in risk assets. Despite this, some market participants are expecting a potential breakout above the technical resistance at $25,000 to bring a sharp rally. ConsenSys has acquired HAL, a no-code blockchain development tooling platform. They plan to integrate HAL's configurable webhooks and notification service into Infura's developer stack. This will enable developers to create alerts and notifications at the protocol level for various signals. It will also improve the security and user experience of MetaMask. This acquisition is part of an initiative by ConsenSys to fill the gaps in the building process of apps for the crypto ecosystem. It will help strengthen the company against unforeseen economic troubles. This acquisition of HAL by ConsenSys will allow their Web3 API provider Infura to integrate HAL's configurable webhooks or notification service into their developer stack. This will enable developers to create alerts and notifications at the protocol level for various signals. The acquisition also follows the February 2022 acquisition of Ethereum wallet interface provider MyCrypto to improve the security of MetaMask and its user experience. This move will help ConsenSys stay ahead of the competition in the crypto ecosystem, and offer a dynamic, personalized notification system. ConsenSys founder Joe Lubin also expressed his confidence in the company's ability to withstand any future global economic troubles due to the job cuts that have been made. Ether has increased 42.80% since the start of 2023, but has failed to break out above a crucial bull-bear pivot line. On-chain trends show robust activity in buying, reducing the downside risk significantly, and Ether locked in smart contracts has held steady. However, institutional investors have yet to warm up to Ether. Regulatory concerns and scalability challenges are likely the key reasons behind this reluctance. This article provides an in-depth analysis of Ether on its current market conditions. It looks at the technical and on-chain analysis of ETH, as well as the fundamentals, to provide a comprehensive overview of the cryptocurrency. It is evident that the current bear market has not impacted ETH as much as previous bear markets, and this is partly due to the low selling pressure and strong fundamentals. Additionally, the article highlights the regulatory clarity and scalability issues currently facing Ethereum, which are likely to be a major factor in institutional investors' reluctance to invest in ETH. Overall, this article provides a thorough analysis of the current market conditions of ETH and provides a good insight into the potential outlook of the cryptocurrency.